Hey everyone, thanks for jumping back into the Cryptoverse. This is a premium only live stream. I'm just going to try to grab the link for it so that I can send it to you. Stream. I'll let all the people trickle in. Yeah, we'll see. Hopefully the internet holds up okay. The internet, when I was doing the public stream, it wasn't doing that great. But hopefully it'll hold up. Let me actually try to send out an email so people are aware. So just give me like maybe like 60 seconds or something. And then we'll also try to go through questions and that sort of stuff as well. Just there's not everyone's in Telegram, and so they don't actually know that I'm doing the stream until after it's already over. Okay. Sorry, just give me like one more minute. I just want to send this out. All right. Okay. It's sent. No, this is not the same stream as before. I mean, it's the same stream. Yeah, it's the same stream, or it's a different stream. It's just that we'll talk about slightly different things. So one thing that people are up in arms over, of course, right now is the Pi cycle top. So I just want to give you guys sort of my thoughts on it, and we'll go from there. So again, this is not my indicator, and it was fit to 3 data points, just like a lot of the other indicators. By the way, Matt, maybe we'll catch. We need to move our house, but maybe we'll catch a 2300 ether on stream here. So let's draw the line back at 2300. But anyways, so with the Pi cycle top indicator, basically the implication is that historically, within 3 days of it crossing, you sort of have this major blow off top. And this is if I go over to say this one here, you can see it, right? So you can see that we had 1, 2, 3, and then now 4. Now, I think, you guys can correct me if I'm wrong, I'm pretty sure the creator of this indicator has significantly backpedaled on it and is now saying that it's not valid. But what I would say is that the first thing that we know from it, and we already knew this anyways, is the market is really, really, really heated. Okay, but you didn't need the Pi cycle top indicator to tell you that. Now, the exact intricacies of the Pi cycle top indicator is that within 3 days of it crossing, historically, that's when you see a major correction. So let's suppose for a minute that is what happens. Okay, now I'm not saying that it is, but let's figure out at what point would we say that it's completely invalid and that there's, we'll lay this indicator to rest at that point. And at what point could we say it could still theoretically be predictive? Okay, we don't yet know if it's predictive or not. Again, it's a 3 data point fit. So the pi cycle top crossed yesterday. Okay, so I was getting a lot of comments from people saying that it hadn't crossed yet. I think it depends on the exchange you use. Maybe it was the BLX or something that crossed a day later. Yeah, so according to the BLX, it crossed today. And by that I mean at the last daily close. We're going to have another daily close in about maybe almost 7 hours. Almost 7 hours from now, we'll have another daily close. So the BLX is saying that the day is April 12th, okay, of the cross. That's the BLX. And everything else that I've looked at, like Bitfinex, Coinbase, I think basically most every other exchange is saying that the cross was on April 12th. Now, I can assure you we're not going to spend the entire time talking about the pi cycle top indicator because, again, it's just a retroactive fit. We have no idea how predictive it is. But at what point could we say, all right, guys, it's time to lay it to rest? It's clearly, it's a good exercise to show that we know the market's heated, but at what point could we lay it to rest if we do not have a major blow off top? So if the cycle top, if the local top within 3 days of April 12th, so you have, and let's just say the 12th to the 13th is just 1 day. Okay, so some people, I can't even remember. Let me see how it looks other cycles. Let me go all the way back to this one. So back in 2017, we just want to break this down. It actually got it. It was 1 day before. Okay, so in 2017, it was 1 day before the major blow off top. In 2013, if it loads, we'll go back to 2013, and we'll keep an eye on Ethereum because it actually is approaching 3K here. Or sorry, why do I keep saying 3K? 2,300. It is approaching 2,300. So we'll draw our house and see what happens. But what I want to say is in 2013, it looks like the top came within, according to this exchange, it came, if this was December 3rd and then it peaked, maybe you could say December 4th. So it was also 1 day. It was 1 day before it happened. If we go back to this one, so this one actually happened several days before. So according to this exchange, it was 1, 2, 3, 4, 5. So I guess I don't really know where the 3 days. I think part of the issue is that it varies depending on what exchange you use. Like as we just showed with the BLX, it can be off by a day or something on any given exchange. But on this exchange, it was actually, and by this exchange I just mean this new index for Bitcoin. If we were to look at the BLX for it, let's see where it would fall for the BLX. So back in 2013, we'll see where the BLX has it. Maybe that'll be slightly better. So you can see how it varies. So for the BLX, it was 1, 2, 3, 4. So I don't know. It seems like it's closer to say maybe 4 or 5 days with that one. And I believe that was it didn't get the 2011 peak. And the reason you might be wondering, well, why doesn't it predict the 2011 peak? It's just because it's a combination of the 111-day moving average and then twice the 350-day. And by this point, we had only had 330 days or so of price history. So the problem is that the 350-day just simply didn't exist at that point. Okay, you can see that it didn't start existing until right here, the green line, and that was 350 days after we first had some price movement. So that's why it doesn't have a cross there. But you can imagine that if we did have price history over here, then it would have crossed because you can see that it crossed back down below it, and then it was the orange one going above the green one here. So if you just sort of extended this out, it would have probably, if it did exist, it probably would have come pretty darn close. So again, it's a four. So then it's really it's a 3 data point fit with likely would have done fairly well for this one as well. And then it's now predicting a new pi cycle top. And again, one thing to consider is that this cycle over here was not the market cycle top, because we had a major correction, but then we ultimately just came back up later that year. So it was not a market cycle top. And of course, we have been saying that this cycle looks more similar to this cycle than the last one. So when could we lay this indicator to rest, I think is the real question. I mean, I think always you could use it as a measure to say that, okay, the market's very heated if these two things are crossing. But when could we lay it to rest, and when might it prove to be predicted? So I would say, if history is any indication, maybe 4 to 5 days. I mean, I know that it says they'll say 3 days, but we just looked at the chart. Some of them were within, say, 4 days or so. So with the current price of, or with the current area, the pi cycle crossed on April 12th, I believe. Or was it April 11th? It depends on the exchange. This one was April 12th. On the BLX, it was the 13th. So if we were to go out 3 days from the 12th, that would put us at the 15th. Okay? If you include the 12th, that would put you at the 14th. I would say, by the time we get to the 16th or the 17th, if we have not yet had a major pullback, or starting to head down anyways, doesn't really have to be a major pullback. It could just be that we're starting to head back down. Then I would say, okay, it's time to put it to rest. If on the other hand we really go parabolic here, which I do want people to be aware is a possibility. If we really do go parabolic, and we start navigating up our regression band and go to something ridiculous like 90K or something, then at that point I probably would take some more profits on Bitcoin, because we would be getting, depending on how quickly it happens, we could be getting into the 0.9 risk band again. So the 0.9 risk band for Bitcoin now starts at $78,000. So for me right now, I'm sort of just sitting on my Bitcoin. I don't think I would take profits on Bitcoin again until it gets to 0.95 risk. So if it gets to 0.95, I'll take profits on it. I have sold a decent amount of Bitcoin to some of the altcoins like Ethereum and Cardano and Polkadot and Chainlink. So I'm already fairly lighter on Bitcoin than I want to be, and so I'm not going to be taking profits until probably like the 0.95 risk level, which is still a ways off. And also I do have a certain amount that I'm not going to take profits on regardless, I think, until it's in long-term capital gains territory. So if you guys were following the channel back in October, the last time I was buying Bitcoin was back over here in October, in when we were testing the bull market support band. So when we were testing it, I was accumulating Bitcoin this entire region, but I was also aggressively accumulating it right here, and mainly focusing on Bitcoin accumulation at that time. And I bought it up to around $12,000 or so. So $12,000 was the last time that I bought it, meaning that the last time I bought it was in October. Okay, probably early to mid October. So I do have some Bitcoin that I don't really plan on selling until October of this year. Like I just wouldn't want to touch it because I don't really want to pay long-term capital gains on it. Like I hate paying I don't want to pay short-term capital gains on it. I hate paying short-term capital gains, and because my Bitcoin stack right now is lighter than I ideally want it to be, then I'm again, as I mentioned before, I'm sort of compartmentalizing what Bitcoin I have up for long-term capital gains versus what Bitcoin I have up for short-term capital gains. So there was some Bitcoin I was accumulating back in September and October. I mean, I was accumulating Bitcoin throughout this entire region over here, but the only Bitcoin that I have is in long-term capital gains is whatever Bitcoin I bought before April of 2021, which there was a lot. I mean, we had this major capitulation back here, and I was more or less accumulating Bitcoin in this range and in this range. So I still have some, but I just want people to be aware that long-term capital gains and short-term capital gains, at least in the United States and some other places, is a thing that you might want to take into consideration. So we have moved back into the peak regression band. We still have not had any weekly closes in it yet. And for us to go up to the top would represent a $90,400 Bitcoin. So we still do have, a significant ways to go to get there. Now, I will say, XRP is one of those ones that I do have a bag in. Probably the worst trade I've made, honestly, in the last year. And I mean, you could argue that it's worked out, but it's one of those things where a monkey could have just thrown some money at an altcoin and it would have gone up. So it's certainly, I'm certainly not here to take credit on buying XRP last year, because right after, I basically, if you guys followed me back then, I bought some like right here, and then like right here, and then the whole the whole SEC stuff. So I can't even buy it anymore. So I do have a little bag of it. I do think that this is one that will probably make it to its prior all-time high and probably go above it at some point. From here, it would represent another 82% move. So I do think XRP will make it to the prior all-time high at some point this cycle, and I do think Litecoin will as well. I mean, I give Litecoin a hard time, and it's because it bleeds against Bitcoin. But occasionally you get these moves up, right? Occasionally you get those moves up, and those can be fun to ride. But again, don't marry Litecoin if you're feeling somewhat attached to it. All right, let's see if we can just usher in. I like to keep the premium list live streams a little bit more informative. I mean, the house TA stuff is a complete joke. I hope you guys get that and understand that. The point is to say that I don't really think TA in the short term is that useful. But let's see if we can usher in a 3,000 or 2,300. I keep saying 3,000. See if we can usher in a $2,300 Ethereum for the first time. Maybe we'll talk about or answer questions and whatnot. All right, sorry, there's a lot of questions. Sorry, let me just scroll up because I missed some of the questions, so I just want to see them. We're currently at 22.99, so we are coming in close to 2,300. Okay, so someone's confirming that the creator of the Pi Cycle Top indicator says it's not valid. I mean, I'm not sure exactly what his reasoning is, but I mean, I guess the argument is if you didn't have the pandemic crash or something, then maybe it would have been slightly different. All right, we're at 22.99.63. What do I think of Uniswap? Yeah, I'm fairly bullish on Uniswap, and I have a bag of Uniswap, so I'm fairly bullish on it. I think it is a good project to have. All right, let me see if we can see a 2,300 Ether. Sorry, I missed a lot of questions at the beginning. I didn't realize you guys were already asking questions. Yeah, these are definitely better than the public ones. Some muscle memory says I should give a like. You don't have to give a like to this one. It's an unlisted video, so it doesn't matter. Thoughts on the Coinbase IPO? Yeah, I'm tempted. I'm tempted to buy some. I'm also. I mean, if I'm honest with you guys, I'm also tempted to not immediately buy some, because it feels like we're buying into FOMO to some degree. I mean, it's going to be valued at what, like over. I feel like it's probably coming in a little too hot, right? A little too hot, and so it's hard for me to want to bite the bullet and buy some of those shares. Like, I do want to buy some, but I don't know that I'm going to do it the day that it lists. I mean, honestly, I haven't even quite figured it out, and I know that it's tomorrow, but I did not have, like, I don't have money allocated to just go scoop it up tomorrow, if that's the question. Yes, I'm probably going to buy some. I'm not necessarily planning on buying it tomorrow, though. Okay, let me just look at. This is my, okay, so Cal says this. I just want to get through all the questions, so I'm going to go back up, and I'm trying not to miss anyone. So Cal says, this is my first crypto bull run. How did it feel the days leading up to the crash for you? Sentiment on the internet and among other crypto people. I mean, it basically, what I remember was, at the time, and by the way, I was not publishing stuff at the time. I was in graduate school, but everyone that I was following at the time, so the people that had been around YouTube for a while, or around crypto for a while, I think had a better head on, and they sort of saw it for what it was. You know, some people actually did fairly good, I think, at predicting the top. Other people had been predicting the top for, you know, since it was at $3,000. So when it hit 10K, I know a lot of people thought that was the top, and then it wasn't, and it went up again to 20K. And at that point, I was taking profits. I didn't sell any exactly at 20K. I did sell some slightly below that, but at that point, I wasn't completely out of the market, right? I wasn't completely out of the market because I did still have some Bitcoin that was still in, you know, well in short-term capital gains territory. So I did still have some. I remember that. I did take profits. But if you were around in 2017 and 2018, it became this thing where no one could really imagine it going back down. Okay, so you know, it was basically like this idea that it was going to go to 100K back then. Okay, and that was the idea that everyone was saying. A lot of people were saying. I don't want to say everyone, actually, because there definitely were people that were saying that the market was too heated and that we were going to go back down to test the 200-week moving average, which is exactly what we did. Okay, so that was definitely there, and there were a few people that were calling it for what it was, and that was, okay, it looks like we're in a major bubble. But then, you know, after we had 20K, we came back down to 10K. So, and I think a lot of people forget about that. So we basically had like a 50% correction immediately, and then we had a dead cat bounce. Okay, so let's go look at it, right? Let's go look at it for a minute, so you guys can sort of relive it, like live it for yourself. And I think that might help, right? So let's live through it and see kind of what people were experiencing at the time. So remember, the last cycle was a lot more systematic than this one in terms of testing that 20-week moving average. You can see several tests of it. But then finally, we just ultimately went parabolic. And once we hit 20K, or about 19K, we then had an immediate wick down. I mean, over the next several days, it just kept going down one day after another with this huge capitulation, which was about a 45% drop. We then came back up for our dead cat bounce, or 17K if I remember correctly. It was around 17K or so. Yeah, I mean, you can see it's 17K. But it came back up to 17K, and then everyone was saying, you know, we're going to go higher. And the hardest part is the reason why people think we're going to go higher continuously is because that's all we ever did for 2 years. That's all we ever did. So you can't necessarily blame them for thinking that we were just going to go higher, because every single time that we came back down and tested that 20-week moving average or had a major correction, we ultimately just went higher up every single time. It just was higher up and then back down, and then we just kept putting in new highs and then back down. So when we came down to this level, the general idea was, okay, we're just going to go back up, and then we're going to go to 25K, and then we're going to go to 50K, and then we're going to go to 100K. Okay, that was the public sentiment at the time. Okay, that was the public sentiment at the time. The more seasoned investors, and again, I was not publishing content at the time, so I can't take credit for any of that stuff because I wasn't publishing content then. But the more seasoned people that I was following too were saying, you know, okay, we're in a fairly heated market, and there's a good chance we come back down. And we ended up going back down to the 200-week moving average, okay? So we don't really talk about the 200-week moving average. We haven't spoken about it on this channel in a while, and it's because there's no reason to, right? There's no reason to talk about it because we're nowhere near it. If we pull up the 200-week moving average, you'll see where we are. And I don't think we're about to go down to it imminently anyways. But if we just pull it up so that you guys can see where it is, we'll do that. Let me make this the 200-week moving average. Okay, so the whole idea behind the 200-week is in the bear market. That's where Bitcoin sort of finds support. Okay, that's where Bitcoin finds support, and then it found support here again, and then here we found support on the weekly time frame more or less. But we did have wicks down to the 300-week moving average, in fact. And if you guys just to have it on there so you guys can see it, we also will put on the 300-week moving average because we did have a wick down to that level during the last bear market. Okay, so we had a wick down to that level right there. So we don't really talk about the 200-week moving average in a bull market so much because it's so far away that no one ever imagines it being a possibility. But one thing to consider last cycle, right? One thing to consider last cycle is that once we were up here at this peak, there were people saying that it was going to go back down to 3K, and no one believed them. Right, like not a single. I mean, there's no way you were going to convince most people that there could be any chance that we would go back down to $3,000, and we went back down to to our fair value regression line, and then to the 200-week moving average. So there was definitely no convincing people of that back then. But you can also see there are some differences here between the anatomy of what happened last time so far and what's happened right now. So leading up to the market cycle peak last time, we had several weeks that were fairly impressive returns. Okay, so let's just walk through this so we can live it together and pretend like you're there. Okay, pretend like you're living through the 2017 bubble. And kind of feeling like, why were people so bullish back then? Well, if you look at the weekly chart, it was basically just up and up and up every single week, except for a few corrections, okay? And the last corrective week was on November 6th before a 5-week surge, okay? And we had a 37% move on that week, 16%, 21%, 34%, followed by 27%. So within, say, 5 weeks, the valuation of Bitcoin increased by about 236%. Okay, think about that. Within 5 weeks, the valuation of Bitcoin increased 236 or 237%. Imagine that. Okay, that's why everyone was so crazy back then about it, because it just was going up like crazy. And the reason why this was insane was because it was a 237% move, and that was starting at like 6K almost after this correction. But 6K was still like 30x up from the bottom, because the bottom was like $200 or something. So 6K was still a very substantial move for Bitcoin. I mean, if Bitcoin had topped out at 6K, that would have been, a crazy move as well, because it still would have been a substantial move from the bottom. So the bottom was right here, and to get to 6K, that still would have been over almost a 3,400% move. We ended up doing about 100x, right? We ended up doing about 100x because the price of Bitcoin went up another 3x or so from that point. But that's why everyone was so bullish back then, was because it was just going up 30-40% every single week in November, and then in up to mid-December. Right now, we haven't experienced that same type of thing. Now, there are some similarities in the idea that you're looking at essentially all these green candles in a row followed by a few red candles. Okay, so let's look at the similarities. So the similarities are, okay, you have all these green candles in a row and then a few reds, but then we ultimately just continue higher. The same thing, right? We have some mainly green, a few red, but we continue higher, mainly green, a few red, continue higher, and then the same thing. We have not entered into, like right now, the price of Bitcoin does not look in the same, it's not emulating the major blow off top that the last cycle had right now. Okay, it's not emulating it yet. We have had a major move from our fair value regression band to the peak regression band fairly quickly, but we have not yet seen something like this where you get into that, that crazy part of the bubble where you're just going up 20-30% a week, and you're in the upper regression band. Okay, we just entered it as well. And I do want people to have some flexibility with this. Like, I mean, we could go to 100K or something, and I don't necessarily think that's a big deal. So that's what I think we should be on the lookout for. Is this going to be the beginning of several weeks in a row where we are going to be going to much higher levels, right? I mean, if we do 15% next week. By the way, I was talking about the last cycle. I would expect some type of diminished returns in terms of volatility, because there is a lot more. The market cap is a lot higher, so it does take more volume to move it. But I mean, imagine you get a 15% week followed by another 15% week, and let's just say those weeks start. I mean, they could start next week or something. Then that would put you at like $83,000, $83,000 within a couple of weeks if you just had two 15% moves back to back. So then if you had a third week of 15%, then that would actually get you to $95,000. So in that type of a move, okay, if we see something like that, where we're moving up like 15% a week for the next 3 to 4 weeks, then I'm probably going to be, I will be taking some more profits on Bitcoin at that point. If we do something like that, because if we do, and we look at the Bitcoin risk metric, we're going to be flirting with, the 0.9 to 1 risk band for sure at that point. And not only that, we would also be, our extension from the 20 week at that point would almost assuredly be back up, and testing our general extension from that 20-week SMA, right? The general idea that we will not make it to prior levels of overextension from the 20-week moving average from one market cycle to another. Now, what we can do, one thing we can do is we can pull up Wolfram Alpha and try to figure out, well, where could it theoretically go in the short term and still not reach the same extension from the 20-week as last cycle. And so we'll quickly do that. So the current 20-week SMA for Bitcoin is at 42,782. So we'll say if this is 44,782 and we set that equal to the same extension from the 20-week as last cycle, it would be about 1.04. So I think that whatever number this comes out to be is something that we cannot obtain this coming week, or probably within the next week or two. And you can see why. It would be $126,000 Bitcoin. So you sort of see why. I mean, every cycle, the volume it takes to move Bitcoin is increasing more and more, right? The amount of volume it takes, because the market capitalization is so much higher. So I do not, for us to reach the same level extension from the 20-week, we would have to go up here, which would, this week, it would represent a $126,000 Bitcoin. So I think that is too far extended for us in the short term. Okay, what is maybe not so far extended, or what is theoretically possible? Maybe we go to 0.79 on this chart. Where would that put us? Where would that put the price of Bitcoin? So 0.79. If we were to go back up to where we were a few months ago, and we came back up to this level, and let's say if we did it this week, which would be ridiculous if we did it this week, but if we did it this week, it would correspond to a $98,000 Bitcoin. So you sort of see these things where it's like, okay, well, it's possible that we're coming up to a major blow off top. The idea that, the pi cycle top is crossed. We know that it's extended. It's a fit to 3 data points, so we don't know how perfect it is. We see that the top of the logarithmic regression band is already in the $90,000 to $100,000 price range. So if it were to make it up to that point in the next couple of weeks, to me, that would likely be somewhat indicative of a blow off top. And then if you look at the extension from the 20-week moving average, you can see that if we were to go to 100K, we would be back up to this level as well. Now, I want to say something, and that's, none of this has to play out like that. I mean, we could just chill. It's a possibility that we just chill at 63K for a while, and then we're sort of kicking the can down the road, and then also changing what our theoretical limitations are in the short term. So we know that that is a distinct possibility, that Bitcoin cools off for a while, because we were sort of doing the same types of analysis back over here in February when we were heading up. And at that point, we didn't yet know if we were just going to go ahead and move up like this and maybe put in a major blow off top in the short term. But we didn't. We sort of just came back down. We held the 8-week as support again, and we've continued moving up. So we're doing this analysis on the idea that if this happens, right? If this happened, by the way, it looks like Ethereum did hit $2,300. We're doing this analysis on if it happens, then that's how we, there's certain ways we might want to react to it. We're not necessarily saying that it's going to happen. So Ethereum, it looks like Ethereum did hit 2,300. I'm just looking here. You can see it went to 2,300 right there for a second, and right now we're approaching it again. So just something to keep in mind, that Cowan corridor indicator, which is just again a dubious fit to 4 data points, is above the regression band, right? So it's all the way up here at $107,000. So the thing is we've been consolidating now for about 2 months. Okay, the price of Bitcoin has not done anything that consequential for approximately 2 months now. So that's why I do not necessarily think that we are at a market cycle top. Yes, we could have corrections, but I do not think this is indicative of a market cycle top. You just don't normally see 2 months of consolidation followed by a market cycle top. All the market cycle tops were, it was several weekly candles in a row where we were just going up. And if you go back to the prior cycle, again, several weekly candles in a row where we're just going up, and there were even more of them, and these were even more substantial. So, and that's why I think that this one will be less. I mean, if you look at the last cycle, again, it was 37, 15 or 16, 21, 34, and 34 or so. Or what was the last one? Not 34, 27. And then the cycle before, it was slightly more. So if we take it from the bottom where we started moving up, it was 7, 26, 11, 8, 50, 57, 50, and 26. So the prior cycle, the candles were even more, they were more impressive. And that's why I'm saying that I don't necessarily think that you should be expecting back to back weekly candles of 30% or something. I think that they would probably be a little bit calmer if we were to go and put in a major blow off top in the short term. So that's why I'm saying, look to see what's happened in the past. And then the peak before that one, which wasn't a market cycle peak, it was more or less a local peak. You can see that we just had nothing but weekly candles in a row: 11%, 10%, 30%. 50%, 30%, 75%. And then this one had a blow off top and then ultimately closed the week down. And then this one, if you go back one more, it was 51%, 47%, 86%, 27, 81. We had one red candle followed by another 26, 98, and 11. So one of the things we've noticed from each major blow off top is that the weekly candle limits, or how heated they can get, they're not getting quite as heated as they were from the last cycle. So that's why I'm saying, I just want us to go into this with an open mind and say, if we start to get these weekly candles where we're just going up 15 to 20% each week, then that could be indicative of a major blow off top inbound. Right now, if we go back down, I would not consider that to be a market cycle top. If we were to immediately go back down, I would say, let's regroup. Maybe we go back to the 20-week moving average and then trend higher. But I would not necessarily say that it's a market cycle top. And you can see Ethereum is at 22.99.75. Let me try to answer some more questions. I am Jason says I can't. I'm so far behind on the question. Oh, we're at 2,300. So at least we were able to see that here. So I am Jason says I can't see Bitcoin hitting 70K before a minor dip below 60K. I mean, it's possible, but I think the key thing to remember is that we don't really know what's going to happen in the short term. We should just prepare for various outcomes and then react accordingly. Someone says, Steve O says, after watching your recorded videos normally at 1.75 speed, live I sound sleepy. I can understand that because I've done the same thing with other people. I've already answered some of these questions about Uniswap. What percentage of a coin qualifies as a small holding? Well, I mean, you know, if I have a project where it's a 10 to 15% of my portfolio, I don't consider that a small holding. If it's 2 to 3%, I would say it's a relatively small holding. Or 1%. Can we get more content on the well-oiled machine? Yeah, I mean, I think that earning interest is a great thing, and I think that the people that have been earning interest for the last year or two are sitting a bit prettier right now than the people who haven't, because it might not seem like a lot. I mean, even 12% might not seem like a lot to a lot of people, but you have to recognize that if you're earning 12% and then the valuation goes up 10x, and that 12% you were earning can make a big difference, right? I mean, that could pay for your car potentially. I mean, it just depends on how much you have moving, or how much you have allocated to crypto. So I do think that earning interest is important, but I think that spreading out your risk amongst various platforms is what you should do. For instance, I use BlockFi. It's a centralized platform. I think Celsius Network is also a decent platform to use. There's also, you can use Uniswap liquidity pools. You might need to be thinking about impermanent loss in that situation. You can, I use Compound.finance, which is a decentralized tool. The problem is that a lot of people don't necessarily know how to use the decentralized stuff, because it's easy to just say, okay, everyone use everything decentralized. But the problem is that a lot of people don't necessarily know how to use that stuff, and therefore centralized things where they literally just send their crypto to some centralized platform is better for certain people. So I think that spreading your risk around to various platforms is the key thing. You know, I'm earning 12% on Kraken, on DOT. You know, I ADA as well. Again, I do have, we just launched the ITC ADA stake pool, so I would consider checking that out. You can earn just over 5% on your ADA. Note that I just launched, so you're gonna have to wait a few epochs here, or a few epochs to get the rewards, because that's just the way when you launch a new pool, that's the way it works. But you can be earning just over 5% on your ADA. So the idea is, you know, if you're setting up your well-oiled machine to just navigate through crypto and you don't really care what happens, maybe you take some profits, but you want to keep some crypto, and I imagine most people want to keep some crypto no matter what, then yeah, you can set up that well-oiled machine. And you can also be earning interest on stable coins too, which I don't think enough people take advantage of, as well. As you could just earn interest on stable coins. And I know several people who have turned their interest coin, or their interest that they're earning on stable coins, they basically use that to replace their date or their income. Now the interest rates at some point will go down, but while they're high, I feel like it's worth taking advantage of. How's the ADA chart looking? So I think with ADA, what I'm looking for, I would like to see a daily close above $1.38. So right now we're at about around $1.40, $1.39 or so. I'd like to see some daily close up here, and to start seeing us really break out of this, because until we do that, it's nothing more than one of these wicks that took us above, and then we ultimately come back down. So I would like to see daily closes above that level before I'm going to get super excited about ADA. If we get daily closes up here, like above $1.40, then I'll start to get excited about the short-term implications for ADA. Mark says, thanks for the email. It helped me find the stream on time. Yeah, I'll try to do the emails from now on when we're doing the live stream. How is the US dollar doing? Hold on a second. I just noticed that Ether is above 2,300 right through our door. I mean, the point of house and garage TA is that it's a complete joke, right? That you don't really need fancy indicators to talk about short-term price movements. But I would argue that it's been one of the most predictive indicators on the channel, or on any channel for short-term TA. Just goes to show you that I'm only doing house and garage, quote unquote house and garage TA based off momentum. So it's basically just looking at momentum and following the momentum. It's nothing more, right? I just look at okay, we're generally trending up here. Therefore, let me draw some type of house where the momentum is taking us. And I think that momentum is something that you can generally take to the bank. So that's just something to remember. Oh, the dollar, right? Someone asked me about the dollar, so let's check the dollar. So the dollar has come back down recently. Let's switch this over to the weekly time frame and put on our bull market support, which it is there already. So the question again is it going to fake us out like it did back in October of 2017? Remember, we had some weekly closes above, and then we ultimately fell below. We're looking at something similar so far. If the dollar holds these levels and then trends back up, then it's probably bad for Bitcoin. But if it's a fake out like October of 2017, where we had some brief closes above it, but it wasn't like a sustained move up, then no major bear market yet. Do I ever think that holding other coins could cost you some stage? I'm not sure what that means. Or due to the opportunity cost of not holding Bitcoin when it goes parabolic. Well, I mean, the thing is yeah, I am a little light on Bitcoin, admittedly. I would like to have more than I do. But the nice thing is that a lot of the projects that I traded the Bitcoin into have been outperforming Bitcoin. Okay, so I mean, ADA is a good example. Ether is actually still doing well. I mean, if you think about when some of these trades are made, I mean, Ether is actually doing really well right now in this 3 weekly candles in a row. The VeChain, I just took profits on VeChain to Ethereum, and that's been a good trade so far, and Ethereum's going well. ADA, if you look at the ADA Bitcoin valuation, it's doing well. So I mean, yeah, like if you hold too many random garbage altcoins, then yeah, like the opportunity cost of not holding Bitcoin is very high. I still have a decent Bitcoin position because, again, I've separated out my short-term capital gains taxes. I'm not touching the Bitcoin that would be subject to that. So any Bitcoin that I accumulated, last year from April until October, I'm still sort of holding on to, and I'm not selling that Bitcoin. But out of the Bitcoin that is up for long-term capital gains, yes, I am somewhat light on it. Fortunately, so far the coins have been keeping pace. I mean, even DOT has put in, DOT's up about 10x from my cost basis, which is good. So yeah, this is why I say don't get too far down the altcoin rabbit hole. I would say 5 to 6 major holdings at most, right? 5 to 6 maybe. 5 is, I think, that sweet spot. 5 major holdings or so. And if you want to have some other positions and some other coins, you can, but I would keep them relatively small and not bet the family farm on them. And then, hopefully have a decent amount of Bitcoin. So the problem is that when you think of like what's theoretically possible for Bitcoin in the short term, is a 2x possible from this point, this market cycle? I would say that a 2x is. I think that a 2x is. Is a 4x? I don't know. That's where it's getting to. Probably not, right? Probably not a 4x. Whereas the 4x on Ethereum, I could see potentially a 4x on Ethereum. And then you get into some of the other altcoins like ADA, Link, and Polkadot. I could definitely see 4x's there, but the risk on those is higher, and so that's why my positions in those are lower, is because yes, I would hopefully get a greater return, but if Bitcoin kicks the bucket before these altcoins can take off, then the downside risk is immense. Okay, so that's why I say try to keep some of those. You don't want to go all in on most likely any specific crypto, but I would say try to. And if you're new, I would always start with Bitcoin. So it's Bitcoin first, then Ethereum, in my opinion, and then you can work your way down the list and get some other altcoins. All right, let me look at some of the other questions. So I'm really far behind. Using my risk metric, could I end up with 0 Bitcoin but still have a lot of other coins? It's possible, but again, because I've separated out short-term capital gains Bitcoin, the only time that could theoretically happen would be by October. If by October everything, all my Bitcoin comes into long-term capital gains territory. And, if Bitcoin's trading at like $180,000 or something, I'm probably just going to be happy to take some profits on that. I might keep a little bit, but I probably would keep a small amount, but I would still be selling a lot of it. Okay, sorry, let me keep answering these questions. Ben should also focus on that people bought Bitcoin or other coins maybe at a much higher price than himself, and inform people accordingly. So we've done that, and this is the hard part of navigating so many different scenarios, is because so many people here have been following the channel and were accumulating Bitcoin at like 5K, and then you have a lot of people that didn't start accumulating it until 50K. So whenever I make a weekly premium video for new people, all the people that have been here for a year or two get upset. And then when I make super complicated videos, then the people that are new feel like it's not really worth it to them, because they're like, okay, well, I just want to know what I should do today. So it's really hard to please literally every single person, and this is why I try to mix up the type of content that's coming out. If you're new, I've always said, I wouldn't bet the family farm, but I've said this many times, and I've been saying it since Bitcoin was at 15K or 12K, that if you don't own it, you could still come in and buy some, because as I said, Bitcoin is too risky not to hold. But if you're buying it now, have a longer term outlook, okay? Because we do not know when the major correction is going to come. Have a longer term outlook. If you look at the 4-year ROI on Bitcoin, it hardly ever goes below 10x. So 4 years from now, I'm not saying that we're going to have a $600,000 Bitcoin. I feel like the 10x ROI or the 4-year ROI will come back down some. But the key thing to remember is that those who hold through the bear market are the ones that stand to gain the most, and those who continue to DCA in the bear market gain the most. Okay, let's keep going. How come the alt risk metrics are much lower? So as I said before, right? So the Bitcoin risk metric accounts for diminishing returns. These don't. That's why I've said that I would generally think of these risk metrics as capping out at 0.9 risk. The younger the coin is, the more likely it could go into the 0.9 to 1 risk regime. But I would generally be running for the hills if any of these get to 0.9 risk. Okay, if you see Ethereum, Link, maybe Link, I would be a little bit strong, or I wouldn't necessarily be as wanting to sell everything, but I would be taking a lot of profits. If you see Ether or ADA, or any of these coins like Monero or VeChain or XRP or Litecoin, if you see any of them at 0.9 risk, like, I would be definitely taking profits if you haven't already. Okay, so the implication here is that, okay, well, maybe you should just assume that these are 1 risk band higher than they are, and then they can go to 1 risk, right? So if you just assume that Ether risk is now at 0.697 and that ADA is at 0.666, then, okay, in that situation, if you're adjusting the risk band, then you could say, okay, they can go to 1.00 risk. But again, these don't account for diminishing returns. Bitcoin does. Okay, let me keep going. Yeah, and by the way, yeah, someone said this too. If Bitcoin does have those weekly candles in a row, like 4 or 5 weeks in a row, where it's just going crazy, it's altcoins can go crazy too, but they also go the craziest after that, right? After that happens. Thoughts on DOT? Yeah, I'm still very bullish on DOT. I think that DOT will probably trend to I don't think it's going to make it to 4 figures this cycle, like I've seen some people throw around, but I think that it could make it to a few $100s at some point this market cycle. What happens to the model if Bitcoin spends like 2 months above the top regression band? Yeah, so if it spends... Yeah, so I think what you're saying is yeah, like what happens to the model So it's one thing if it comes up and goes above the regression band. Let's say it does something like that, and then it comes back down. Like if it does something like that, we can work with that, because then we just refit the regression band to the new peak, right? We just fit it to the new peak, and then it will slightly adjust it. But I think the question is not if it has a peak there. What if it goes up here and then just chills? How will that affect things? Yeah, I mean, I think that we would. I mean, that's a good question, honestly. I mean, it would probably. I mean, we could still fit the entire region potentially, kind of like maybe we fit these regions down here for the accumulation band. It would certainly affect the model. We might have to look into other models at that point if something like that were to happen. I mean, we're still a ways away from that happening now. I mean, we would need to get to well over $90,000. Again, the current upper bound on it is 90.4K, and it's going up by about $70 a day. So, you know, in another 10 days, it's going to be at $91,000 or so. So it is moving up relatively quickly. I mean, I think we should say we'll cross that bridge if it happens. Which, I mean, yeah, it's certainly a possibility. Let's keep going. How do I calculate the risk metric? I've told you guys that it's just a function of price, time, and volatility, and for Bitcoin, accounting for diminishing returns. Like, that's all it is. It's basically looking at prior moves, thinking that human psychology is the same for Bitcoin, but accounting for the fact that it takes more volume to move the market. That's where it comes from. I have a question for you guys. I'm really curious, and it's actually a really important question, and could affect something. I mean, basically, it would add things to the premium list. But I want to get through the questions first, and then I'm going to ask you guys if you'd be interested in it. Sorry, I'm so far behind on the chat. I have to scroll down because I'm so far behind. I'm never going to actually get to the current questions. So my question for you guys, let me just go ahead and ask it, because I would like to get your feedback on this. I don't know if this is something we're going to do. I don't know that we're going to do this, but I would like to know if people would be interested in it. Okay, I want to know if people are interested in it. I'm not saying we're going to do it. I just want to get your opinion. Okay, so we have a group here, a fairly sizable group, right? A fairly sizable group. Because we have a sizable group, and because my footprint in the space is growing, it's possible, and I don't know who here is familiar, but have you guys heard of like things like private placements? Okay, have you guys heard of private placements? So it's possible that there could be times in the future where I'm talking to some companies, maybe they're going to go public, maybe they already are public, but the idea is that you have a private placement where maybe if you're on, if you're part of the group or whatever, you can get a discount on say a stock of that company. So I'm not saying this would happen with any specific company, but crypto's growing, right? It's becoming a little bit more mainstream. Some of these companies that have been building out their foundations for years are starting to go public, right? They're starting to go public. And the thing is when companies go public, they want to generate hype, right? They want to generate interest. They want to generate hype. And because I have a decent following, and again, I'm not saying this to brag. I'm just saying these are the circumstances we find ourselves in, right? I mean, it's the only reason I'm doing this is because of you guys. So it's thanks to you. But because the group has grown so much, private placements might be a thing we could consider. And the general idea is if a company's public, or if they're going to go public and they want to generate interest, they might offer maybe 5 to 7% off the stock, right? They might give you a discount, like give you specifically a discount, okay? And if that happens, though, there is a catch, right? There's always a catch, right? If that happens, there's typically a lockup period, right? So you might have to hold the stock or something for like, 6 to 12 months or some predetermined amount of time, and you're just simply not allowed to sell it, right? So you might get it at a discount from whatever the market rate is, if there is a market rate. Like if it already is listed or something, you might get a discount, but you might then have to hold it for 6 to 12 months, and you're not allowed to sell it. So I'm not saying we're definitively going to do that. I just want to get your guys' opinion on it. I'll probably post an alert on the Telegram channel and say, hey, like, let's talk about this here. There's maybe ways we could explore this. If this would provide value to you guys, if there's enough of you that would find value in something like that, then I'm interested to explore it. Because the general idea is, right, you would get a discount on the stock. You have to hold it for a certain period of time, but then once that period ends, then you can do whatever you want to. So that's just something to consider. That's one way that we could utilize sort of this group to provide even more value, right? To provide value beyond just like the data science or technical analysis, but to provide value in say getting deals that you might not otherwise get. Okay, so that's one other thing. The other thing I want to tell you, besides, well, maybe I'll leave that on there so people that are joining can see it. So that's one thing. That's one thing that I see the direction of this thing potentially going. So I want you guys to know that I am thinking about this. I will put an alert on the Telegram channel. I'll say, all right, let's discuss about it here. All right. The other thing is, I've been saying this for a few weeks now. I'm trying to launch the first Into the Cryptoverse NFT, and basically what it's going to be is going to be like a piece of digital art. So you might wonder, well, what's the utility in it, right? Is it, it's basically it's going to be a piece of digital art, hopefully from a fairly well-known artist, and I'm just going to give it to you. Okay, so I'm not my goal is for the very first Into the Cryptoverse NFT is going to be a piece of digital art, and I'm just going to give it to you. I'm not going to charge you for it or anything like that. I'm just giving it to you. Now you might say, well, why haven't you done it yet? Why haven't you done it yet? Well, the issue is that I could, but in order to do it, I would need to pay the gas for it, right? And the gas, and I want the first Into the Cryptoverse NFT to launch on Ethereum, right? I mean, I'm probably going to launch some on Cardano and maybe some other networks, but I cannot launch my first NFT and it not be on Ethereum. So the very first one will be on Ethereum. The problem is, if I pay the gas for it, it's going to cost, $50K to $100,000 with the current gas fees. Okay, so this is something I would like to avoid. That's something I would like to avoid. Now, the potential solution is there's a company that I'm talking with, and they're called Immutable X, and I'm working with them to launch this, where I don't have to spend $100,000 to send out the NFT. So I'm working with these guys. I'm working with Immutable X and an artist, hopefully, right? Art, to then try to get the NFT to you guys. All right, that's the plan. So I just want to give people an update, because I've mentioned it before. You're probably wondering, well, why haven't I gotten it yet? That's the reason. I'm trying to figure out a sustainable way that we can make this work, rather than spending $100,000 a pop on sending you guys an NFT. Because the alternative, right? The alternative is I just make you guys pay for the gas, but that's not what I want to do, right? I want it to be free for you. Like I want to just give it to you, and it's not really free if you have to pay like $20 in gas to receive it or something, or 30 or whatever it ends up being. I mean, it can be even more expensive. So that's where that is, and so that is something that is coming. I really hope it comes in Q2. Like I really hope it comes in Q2. If it were up to me, it would have already happened 3 months ago. The reason it hasn't happened yet is because of that. Okay, that's the reason. So that just gives you a brief update on there. So let's see where Ethereum is. So we're still at just about 2300. Sorry for the segue. Hopefully that was useful, and we'll talk about this a little bit more, on Telegram and whatnot, as we continue navigating that. Yeah, I mean, and if you don't like, and I get that some people don't really think that NFTs are worthwhile, and that's fine, right? I can appreciate where you might stand on that, but the point is I'm the very first one I make, the goal is to just give it to you, right? I'm not, it's just to give it to you, and from that point, you know, you can do whatever you want with it. I don't care. I don't care what you do with it. But there is enough. I think there's enough interest that we are going to do it, even though some people might not think it's worthwhile. Yeah, what kind of wallet? So you know, if you're not familiar, and by the way, I need to make this clear, and I'm going to say it probably 100 times over the next few weeks. It cannot be a centralized exchange wallet. When I collect your Ethereum address to send you the NFT, you cannot send me your Coinbase Ethereum wallet. You cannot send me your Kraken wallet or your Gemini wallet or your Binance wallet or whatever Bitfinex wallet. You cannot send me that. You need to send me a wallet that you own the private keys to. And I would recommend, there's plenty of them out there, but if you want my official recommendation, is this one. You can see it in my browser up there, MetaMask. So if you're new to crypto, I would recommend spending a little bit of time going and getting the MetaMask wallet, and that way, whenever I do come to you and say, hey, we're doing the NFT airdrop, you have your Ethereum address ready to go. Okay, so that, I would say, if you're new, check out MetaMask, so that you're ready to go on that. Yeah, the NFT is for premium. The very first Into the Cryptoverse NFT will be for premium list subscribers. Yes, it doesn't matter if you're on a lifetime subscription or a monthly subscription. It doesn't matter, as long as you're a subscriber. Yeah, we're not the NFT that I give you guys. You know, it's nothing more, nothing less, right? There's no further discussion of it from there, right? No further discussion of it from there. By the way, remember, if you guys want to join my ADA stake pool, check out, it's the ITC take stake pool. So ITC. Yeah, you can get it. You can get MetaMask as a little extension or something on Chrome if you want. You don't have to have it as an extension, but I just usually have it up there in the upper right. All right. Well, I think we've covered a lot. I mean, you guys kind of generally know where I stand right now with the market. XRP is still generally moving up. I mean, I certainly I expect it to go. I expect XRP to make it to its prior all-time high. So I mean, that's still another 80%. Still another 80% or so. Litecoin to make it to the prior all-time high, I believe it needs to go to 385. I think that was the prior all-time high for Litecoin back in 2017 was 385. All right, what's today? Is today Tuesday? I think today's Tuesday. So we'll do the weekly roundup tomorrow, which is another premium video. So we'll do that tomorrow. And we'll see where we are tomorrow. Obviously the markets are moving relatively quickly. For ADA, look for closes above 138. Let's hopefully we get some daily closes here above 138 and we start to make a run towards $2. That's what I'm looking for. For ADA, you know, I don't really want to take profits on ADA until it gets at least a 0.7 risk now, which is over $2.40. So another reason why, you know, just staking and letting it ride for a while isn't necessarily the worst idea for me. Should we be concerned if a coin has not yet reached the all-time high? I think there are some coins that will reach their prior all-time high that have not yet, like XRP and Litecoin. There's a lot out there. If they haven't reached it, there's a good chance they won't. I'm not saying they won't, but there's like probably like 70 or 80% of coins that have not already reached their prior all-time high from 2017, 2018 never will. All right, well, why don't we wrap it up there? I actually have a meeting here soon. And it looks like, I mean, at least we were able to usher in a $2,300 Ether, if not on the public stream, but on the private stream. But yeah, why don't we wrap it up there? I'll still be around, right? I'll still be around, but I need to get some things done. Thank you guys for tuning in.